Hello and welcome to another update video about HBAR. Yeah, on this chart, the market is also in a small sell-off. We can see that. We're still holding overall support and the price is working on this WXY pattern. And this, we talked about that, I believe, yesterday. It's this correction. Whether it's a wave 4 or a B wave is currently secondary. The idea is that the larger wave 4 here bottomed on the 20th of December. And we moved away from that support area here, fell back into it. Another good reaction, okay? And as you can see, this is a 3-wave move up from the low, which means ideally to fulfill a 5-wave pattern, we want to see another 4-5. Or it might turn into a larger 3-wave move labeled in A, B, C. So that's why we're watching currently for potential support in this area, which is defined between 33 cents and 27.5 cents. So this support area is something to consider. The price already reached it. We had a bounce from the 50% retracement at 31.3 cents, but only a 3-wave rally, okay? So I think yesterday I already shared with you my idea that this might morph into, or not morph, but just play out a WXY structure. And the Y wave is an A, B, C, for which the B wave formed the top on Sunday. And we seem to be working our way lower in a C wave, which should be a 5-wave move. At the moment, I can only see 3 waves down, so it might need another 4-5 pattern, okay? So I think there is a good chance that the price will reach the 61.8 retracement here, 1 second, before attempting to form a low. So that's at 29.7 cents. Is that just a random choice here, or why do I tell you that? Well, it is based on, first of all, the idea that the 61.8 retracement is a very, very important Fibonacci retracement. I mean, that's the key level, right? It's a 61. It's a golden ratio level. It's a very important one. And then this is also where the 100% Fibonacci extension is positioned, which is relevant as well. Why? Because that's a key target for such a corrective leg down. Let me explain. There are obviously, you can calculate support, standard support. I already mentioned that. That's the orange box, the upper orange box. But then we can look at the internal structure. It's always a bit tricky in corrections, but best I can tell, this is a wave W, NX, and then the Y wave is an ABC, A, B, C. Obviously with the option that the C wave is still unfolding, but based on the W wave, wave W, we can calculate a target for the Y wave, and that is located at 29.5 cents. At least that's the first ideal target. Not necessarily super reliable, and I will delete that price channel here. Not necessarily super reliable, but it's best we've got. Best we've got. Now, what we can do in addition is, after the price broke out of the initial price channel, we can draw another one, which we draw based from the top to the wave B. We go to the low, and it's just an additional channel to watch. So we'll see if the market finds support at the lower boundary line of the channel. If not, 27.5 cents could be the next support level below. Overall, what we need now as a next indication that a low has formed is a break above the upper boundary line of the trend channel and a break above the green line at 37.5 cents. Against those levels or areas, the pressure is down. But I would pay attention. I think it looks very likely that we'll see at least one more low. And the blue zone, you can watch the blue zone here for a possible reaction. Yeah, that's the update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.